potential homeowners, a new insurance carrier has come to town. So who are these people? What does it look like going forward? What are their numbers looking like? What do we know so far? So Ovation is the name of the company. Now they are a brand new company, so obviously there's not going to be very many reviews. Most reviews, especially for insurance, are going to be negative anyway. So it's all about what's going to happen when it comes down to filing a claim. But we can get some clues based on one really big factor. Number one is the management company. Windward Risk Managers is managing these three companies: Florida Peninsula, Edison, and Ovation. So if you've dealt with Edison or if you've dealt with Florida Peninsula, they've been in Florida for a long time. I have a lot of policies with them. They're getting really good customer reviews. I mean, at least as far as an insurance company is concerned, right? So both of them are A+ rated companies with the Better Business Bureau. And so I'm not expecting anything different from this new company, especially considering it's being managed by the same risk managers. Now, on my end, what that means is when I'm running quotes, it's the exact same website. So if you ever want to get a quote, by the way, just reach out to me. So these are done through agents. They have appointments. Not anyone can write quotes for these companies, only agencies that have essentially been given the right to write a quote. So we have a right to write. We can actually do the business. We can conduct the quotes, and so they allow us to issue policies. So they are a member-owned exchange. And the best way to explain that is think of like a credit union, where when you put money in the bank or into the credit union, you become part owner of the company, whereas whenever you bank with a regular bank, you have no ownership in the company. You just give them their money, they invest it. When you invest in a credit union, you are part owner, and that's why they're able to provide higher interest rates and things of that nature. Same thing with Ovation. Theoretically, they're getting a lower quote to you guys because you're part owner, things like that. And so their website is kind of set up, kind of talking about that, explaining, shared responsibilities, solid security. They're talking about a surplus fund here. So one of the biggest questions I'm getting whenever I send over a quote from this company is, what is the surplus fee? Even though their policy premium is lower than everyone still wants to know what every little detail is. Not everyone, but some people. And the surplus fund is what the surplus fee is going to. And what's happening is they're taking the policy premium and they're taking a little extra for a surplus fund. Because they're a new insurance company, they need to create a large fund, a large bank account. Whenever someone needs to file a claim, there's money to pull from. And so they're charging a little bit more than their policy premiums to help increase that fund quicker. And if it gets big enough, quick enough, then they can actually start reducing premiums. So the future looks bright. So, worst case scenario, they just reduce the surplus or eliminate the surplus fund. Eventually, best case scenario, they're able to eliminate the surplus fund and reduce the premium, which would be amazing. They're already the cheapest on a lot of quotes that I'm running. Besides Citizens, I've never seen a company destroy on prices. Whenever I run them through all our carriers, we have 99 carriers, including home, auto, flood, surplus, across all of our lines. In Florida, that's how many carriers I have access to. And so when I run a home, there's a lot of competition going on. And Ovation is coming out first place, cheapest, on a ton of my policies. So this wasn't happening when it first came out. This company launched in June of 2024. We are now in the beginning of August 2024. And I'm starting to see them win almost every quote just this week. It's been crazy. Like, what the heck is going on? So if you want quotes, if you already have a home, if you already have insurance, let me know. I'll put a link in the description down below how to contact us if you want to get quotes. So essentially, that's what the surplus fund is. It's going towards a fund. It's not very much. It looks to be about 10% of the policy, give or take. I don't think it's an exact percentage. So who is Edison and who is Florida Penn? So you'll notice that these websites look identical, right? Like when I go back and forth, it's almost like the same company. And I actually thought they were the same company for a long time because whenever I run quotes on my end, it's the same thing. And now I have Ovation added to it. So I'm running quotes, and if it's any of these three companies, I go into that website and I can see all three quotes from these three companies side by side. Ovation is beating all of them. How long will that last? I don't know. So essentially what's happening right now is they've opened their books for the entire state, and they want policies across the whole state, whereas some of these other companies like Edison and Florida Penn would be doing something called exposure management. Because they're a more established company, they have to make sure they only have so many homes in a given area. Let's say Tampa, right? They can only have so much percentage of their policies in the Tampa area, because if a hurricane comes through and goes through Tampa, it would wipe them out if all their homes were in Tampa. Well, because Ovation is a newer company, they want policies everywhere. They don't care. They're like, give me that one. I'll take that one. That one. That one. That one. That one. That one. They want them all. And so, because of that, they're cheaper on a lot of homes, whereas Edison and Florida Pin might be only cheaper in certain areas where they really want extra exposure. Like they don't have a whole lot of homes in Naples, so they want more homes in Naples. That's just an example. I don't really know if that's true, but that's the example I'm putting out. Is these other more established companies are going to be cheaper only in certain areas where they don't have enough exposure, where they're willing to take on more policies and they'll do it on a cheaper rate. Whereas Ovation, because they want policies everywhere, they're just undercutting their competition across the board. So that probably won't last forever. So getting while the getting's good, right? So that's what I'll say about that. But yeah, I mean, these companies have great reviews. There's not going to be any reviews on Ovation. There's no claims yet. There's probably a few claims, but they've only been in business for a couple months. And so it's going to take a while for those policies to get issued and for perils to occur and claims to start happening before we see any sort of customer service feedback and reviews and things of that nature. But I'm not expecting anything bad considering the two other companies that the risk management oversees essentially. Hopefully that explains a little bit. You can go on the website and play around and look at some other stuff. But the easiest thing to do is just to get a quote, and then you can see the numbers on the screen to see if it's worth it to switch for you. I've seen some pretty ridiculous numbers, like literally half off what other people are paying currently. So we're talking like literally give you 15 minutes and I'll save you 50% on your home insurance.